Well, with only days left till the election, many investors are curious what impact these important midterms might have on stocks. In this week's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Dennemann talks with Business Courier editor Rob Dahlmeyer about the influence the election has on the market. Mike and Rob.
Thanks, Peg. And Mike, thanks for being here.
Good morning.
As Peg just said, obviously this is a very, very important election for a lot of different reasons, these midterms. But how do elections typically impact the market?
Sure. So naturally we get a lot of questions about that. You know, most of them along the lines of what outcome will be best for the market. And it seems to be oddly that the answer is that the market is indifferent to who actually wins. So there have been studies done and analysis that have shown that the market tends to focus less on the outcome of the election so much as the election itself. So, you know, you're right, very important elections, and the outcome will influence economic policy and tax policy, and these things down the road will influence the market. But in the very near term, it seems that the market tends to focus more on the event itself rather than who gets the most votes.
So let's talk about that event, because the market has been on quite a roller coaster ride here of late.
Yes.
Does that roller coaster ride have something to do, you think, with the election?
It does. It does. We do know that as the election gets nearer, the market tends to get more volatile, and that pre-election day corrections are actually fairly typical. And I think the reason for that is pretty straightforward. The market does not like uncertainty, and elections are by their nature uncertain events. And certainly that uncertainty is magnified the nearer we get to the election, with all of the political ads, with the news coverage. So, you know, there's no doubt that the volatility has increased recently. I mean, in October, the market was all over the map.
Yeah, sure was.
I don't think you can point to the election as the sole reason for all of that, but certainly it was one important factor that played into what was actually a pretty disruptive month.
Yeah, after the election's over, what do you think? Where do you think the market is headed? I mean, is volatility something we should get used to?
Well, so here's some good news, and that is that once we get past the election, the market tends to perform pretty well. Again, not tied to the outcome,
right,
but rather simply that the election's behind us. So if we look at how the market has performed following previous midterm elections, if we look at just the last 5, for instance, the 12-month period following Election Day had an average gain of 16%.
Wow.
And in fact, we have to go all the way back to 1946 to find a similar 12-month period following the election where the market was actually negative.
Wow.
So that's a pretty strong track record.
Sure.
So as you mentioned, hopefully the market has all of the volatility out of its system and actually is poised for a pretty nice run here once we get the votes counted next week.
Good. So we won't go back to 46. That's just what we have to keep talking about. No 46.
No promises.
That's right. Thanks very much. Peg, back to you.
All right. Thanks, Rob and Mike. Another timely topic.